Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Friday, November 28th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So the gold-silver ratio, that plunges overnight here, and silver looks to eye those all-time highs, and platinum looking at a potential breakout. So looking at some of the breaking news that's occurring, trading on futures and options on the CME are halted due to a data center fault. This is causing hours of disruption with the markets here across equities, foreign exchange, bonds, and commodities. So the malfunction is caused by a cooling system problem at a data center in the Chicagoland area here. So the engineering teams, they've restarted several of the chillers, and they're also deploying some of the temporary cooling equipment. Now, when the market does look to open here, both the S&P 500 and NASDAQ will look to extend their 4-day winning streak. Now, shifting over to the precious metals here, platinum futures up about 71% year to date, sitting at 1648 overnight. Remember, some of the drivers in that market here have been your third consecutive annual deficit due to supply disruptions in South Africa and the broadening demand in the precious metal space. Now, you look at the silver market up about 74% year to date, sitting at 54.65 overnight. This close here, where the halt took place, would be a closing all-time high. The inventory warehouse is linked to the Shanghai Futures Exchange, recently hit their lowest level since 2015. So we're seeing a supply squeeze take place in different areas around the globe. What I've been telling clients here after signaling those higher lows on the daily charts, and you can go back about 4 or 5 videos on this, is that I believe we're going to hit all-time highs, and that looks to be likely. One of the key trend supports I'm watching is going to be 50-30, the 50-day moving average at 49.51, and the line in the sand here at 48.71. That's the Friday, November 21st lows. You look at the gold market up about 50% year to date, sitting at 42.21 overnight. Gold's really been advancing here because of the weakness in the dollar and the weakness in a lot of foreign currencies here. You look at the gold market against the FX space here, ready to make all-time highs in many different markets here. This is really fueled by the growing chance of an interest rate cut before the year end and the structural support with central bank purchases and also strong retail ETF demand. Those key levels of the gold market, really I'm watching a breakout above 42.50, which could signal a move back up to those all-time highs. Key levels of support, 50-day moving average 40.64, key trend support 40.60, and it's the Tuesday, November 18th overnight lows, called at the line in the sand, sitting at 40.32.80. Now, what are the interest rate expectations here that are driving some of this rally? Well, you go to the CME's Fed Watch tool on the December 10th meeting here, markets now anticipate an 84.7% likelihood that the Fed will reduce rates by 25 basis points at its December meeting. The expectations in 2026 are growing to 3 more interest rate cuts here, and that helps ease some of the concerns about AI spending, some of the stretch valuations that lack of interest rate cuts sparked that sell-off earlier in the month. Now, I have been saying here that although the timing has been certain around this December interest rate cut, the direction of interest rates remain clear, which they're signaling lower. So you look at the FX and the risk rundown, the dollar sitting at 99.75, the euro at 115.90, getting back close to that resistance point. You do have the 10-year Treasury yield at 4%. We've been calling for that move and that breakdown below 4% for about a couple weeks now. And you look at the VIX, the December futures sitting at 18.75, below that hair on fire mark of the 20 level. And you look at how the gamma exposure is in the S&P 500 and the SPX. Well, the market makers are currently long gamma. It suggests lower volatility is expected. In a positive gamma environment, what happens to the option dealers? They must delta hedge their position. So they sell futures as they rise, they buy futures as it falls, and then these hedging strategies help stabilize the market and reduce its volatility. You go across the pond, looking globally here in Europe and Asia. Well, European stocks, they were little changed and headed for their 5th consecutive monthly gain. You go to Asian stocks, they fell for the first time this week, most likely some month-end profit taking here, as the MSCI Asia Pacific Index dropped about 0.3%. There's no major companies reporting earnings here today and no meaningful economic data scheduled for the release. You go to those ETF flows, which has been one of the structural drivers in the markets. Well, the ETFs, they bought gold, they sold silver, and they sold platinum. You look at the gold market, just a small rise here, about 140,000 troy ounces, and a third straight day of growth and the longest winning streak since October 20. 21st. You look at the silver market, they cut about 41,000 troy ounces of holdings in the previous trading session, bringing that total purchase for the year at 113.2 million ounces. So the gold-silver ratio drops to 77-1. So if you look at these markets here today, we'll see if this data gets rolling back up. I'm sure that the CME will have things rolling, but it is going to be a shortened session here. So this delay is really cutting into the trading time on this shortened holiday session here with Friday and Black Friday here. I know that the bears are going to be kicking off at about 2 p.m. So that's going to be a big game here to watch. And you know that I'll be watching that most likely with a cold beverage in my hand. So you guys want to open up a futures trading account, get something going with us over here. We also have a wealth management side of our company, which you can talk with my partner, Bill Baruch. He'd love to speak with you here, tell you about some of these build outs that we're having here across different portfolios. We've been making a lot of moves as we are active managers in that particular space. Now, if you have any questions on futures option trading, send an email to info@bluelinefutures.com. Remember, the futures and option trading does involve risk loss, may not be suitable to all investors. Good luck, good trading.